Hey folks, this is Mansoor Suhail from the Accounting and Tax. We are non-resident tax specialists based in Toronto, Canada. Canadian non-resident Section 216 tax, what you need to know. If you are a Canadian non-resident who owns a property in Canada, you may be subject to Section 216 tax. This tax is specifically designed to ensure that non-residents pay their fair share of taxes on any rental income they receive from Canadian properties. Failure to comply with Section 216 tax regulations can result in penalties and interest charges. So it is important to understand your obligations as a non-resident property owner. Under Section 216 of the Canadian Income Tax Act, non-residents who own Canadian rental properties are required to file a tax return and pay taxes on any rental income they earn. The tax rate is generally 25% of the gross rental income. Although there are some deductions and exemptions that may apply, it is important to note that even if you do not make a profit on your rental property, you are still required to pay taxes on the income you receive. Understanding Canadian non-resident Section 216 tax. As a non-resident of Canada, you may be subject to the non-resident Section 216 tax. This tax applies to non-residents who own Canadian rental property and earn rental income from it. The purpose of the Section 216 tax is to ensure that non-residents pay their fair share of taxes on rental income earned in Canada. It is important to note that this tax is in addition to any taxes you may owe in your home country. The Section 216 tax is calculated based on your net rental income earned in Canada, such as property taxes, maintenance costs, and mortgage interest. The remaining amount is subject to a flat tax rate of 25%. To pay the Section 216 tax, you must file a Canadian income tax return by June 30th of the following year. You may also be required to make quarterly tax payments throughout the year. It is important to keep detailed records of all rental income and expenses related to the property, as well as any taxes paid in Canada and your home country. This will help ensure that you accurately calculate your tax liability and avoid any penalties or fines. In summary, if you are a non-resident of Canada who owns rental property in the country, you may be subject to the non-resident Section 216 tax. You may be subject to the non-resident Section 216 tax. This tax is calculated based on your net rental income earned in Canada and is in addition to any taxes owed in your home country. To ensure compliance, it is important to keep detailed records and file your Canadian income tax return by the required deadline. Eligibility criteria. Who is a non-resident? To be eligible for the Canadian non-resident Section 216 tax, you must be a non-resident of Canada for tax purposes. This means that you do not live in Canada or have significant residential ties to Canada. The Canada Revenue Agency, CRA, defines a non-resident as someone who does not have a permanent home in Canada, does not stay in Canada for 183 days or more in a year, is not considered a resident of Canada under a tax treaty. If you are a non-resident of Canada, you may be subject to the Section 216 tax if you earn rental income from a Canadian property. Rental income eligibility. If you earn rental income from a Canadian property, you may be eligible for the non-resident Section 216 tax. This tax is designed to ensure that non-residents pay tax on their Canadian rental income. To be eligible for the Section 216 tax, you must meet the following criteria. You must have earned rental income from a Canadian property. The property must be located in Canada. You must have paid expenses related to the property, such as property taxes and maintenance costs. You must have filed a Canadian tax return for the year in question. If you meet these criteria, you may be eligible for the non-resident Section 216 tax. It is important to note that the tax rate for non-residents is generally higher than the tax rate for Canadian residents. Additionally, non-residents may be subject to withholding tax on their rental income. Overall, if you are a non-resident of Canada who earns rental income from a Canadian property, you may be subject to the Section 216 tax. It is important to consult with a tax professional to ensure that you are meeting all of the eligibility criteria and paying the correct amount of tax. Filing process. As a non-resident of Canada, you are required to file a Section 216 tax return to report rental income earned from Canadian property. Here is what you need to know about the filing process. Obtaining NR4 forms. The first step in filing your Section 216 tax return is to obtain NR4 forms from your Canadian tenants or property management company. These forms report the gross rental income paid to you during the year, as well as any tax withheld. Filing deadlines. The deadline for filing your Section 216 tax return is June 30th of the following year. However, if you owe taxes, you must pay them by April 30th to avoid interest charges. Penalties for late filing. If you fail to file your Section 216 tax return by the June 30th deadline, you may be subject to penalties and interest charges. The penalty for late filing is 5% of the balance owing, plus an additional 1% for each month that the return is late, up to a maximum of 12 months. In conclusion, it is important to stay on top of your Section 216 tax obligations as a non-resident of Canada. By obtaining NR4 forms, filing on time, and paying any taxes owed by the deadline, you can avoid penalties and ensure compliance with Canadian tax laws. Tax deductions. As a non-resident property owner in Canada, you may be eligible for certain tax deductions that can help reduce your tax liability under Section 216. Two key deductions to be aware of are property expenses and capital cost allowance. Property expenses. You can claim expenses related to the maintenance and upkeep of your rental property as deductions on your tax return. These expenses can include property taxes, insurance premiums, repairs and maintenance costs, utilities, if they are paid by you and not the tenant, advertising and marketing expenses, legal and accounting fees related to the rental property. It's important to keep detailed records of all expenses related to your rental property to ensure you can claim the maximum deductions possible. Capital Cost Allowance. Capital Cost Allowance, CCA, is a tax deduction that allows you to recover the cost of depreciable assets over a period of time. In the case of rental properties, this includes the cost of the building and any major renovations or improvements made to the property. The CCA rate for rental properties is 4% per year for buildings and 50% for eligible renovations and improvements. However, it's important to note that claiming CCA can reduce the adjusted cost base, ACB, of your property, which can impact your tax liability when you eventually sell the property. In conclusion, understanding the tax deductions available to you as a non-resident property owner in Canada can help you maximize your tax savings and minimize your liability under Section 216. By keeping detailed records and working with a knowledgeable tax professional, you can ensure you are taking advantage of all available deductions and minimizing your tax burden. Tax payments. When you file a Section 216 tax return, you must pay any tax you owe to the Canada Revenue Agency, CRA, in Canadian dollars. You can make your payment in a few different ways. Electronic payment. You can pay your tax bill online through your bank's website or using the CRA's My Payment service. This option is fast, convenient, and secure. Wire transfer. If you're outside of Canada, you can make a wire transfer to the CRA's bank account. However, this option can be costly due to bank fees and exchange rates. Check or money order. You can also mail a check or money order to the CRA. Be sure to include your social insurance number, SIN, and the tax year you're paying for on the payment. It's important to note that if you don't pay your Section 216 tax on time, you may be subject to penalties and interest charges. The CRA charges a late filing penalty of 5% of your balance owing, plus an additional 1% for each month your return is late, up to a maximum of 12 months. Interest is also charged on any unpaid tax, including penalties, starting from the day your payment was due. To avoid these penalties and interest charges, be sure to pay your Section 216 tax on time. If you're having trouble paying your tax bill, you may be able to set up a payment plan with the CRA. This can help you avoid penalties and interest charges while you work to pay off your tax debt. Tax refunds. If you have paid more tax than you owe, you may be eligible for a tax refund. As a non-resident, you can claim a tax refund by filing a Canadian tax return. Here's what you need to know. You can claim a refund for the tax you paid on your rental income, after deductions and credits. You can claim a refund for the tax you paid on your capital gains from the sale of Canadian property, after deductions and credits. You can claim a refund for the tax you paid on your employment income. If you were eligible for a tax treaty exemption or if you had too much tax withheld. If you are filing a paper tax return, make sure to claim a tax refund. You need to file a Canadian tax return by April 30th of the following year. You can file your tax return online using the Canada Revenue Agency's CRA My Account service or by paper. Include all the necessary documents, such as your T4 slip for employment income, your T776 form for rental income, and your T2091 form for capital gains from the sale of Canadian property. Once your tax return is processed, the CRA will issue your tax refund, if you are eligible. The refund will be sent to the address you provided on your tax return or deposited directly into your bank account, if you signed up for direct deposit. Keep in mind that the CRA may take up to 16 weeks to process your tax return and issue your refund. If you have any questions or concerns about your tax refund, contact the CRA directly. Also, feel free to contact us for your Section 216 non-resident tax inquiries. Visit our website or call us for any questions.